Are you ready to make your money work for you in 2024? With the new year comes new opportunities to grow your wealth, if you know where to look. The investing landscape is changing fast, and whether you're a seasoned investor or just starting out, 2024 is shaping up to be a critical year. With markets evolving and new technologies emerging, there's never been a better time to get started. In this video, I'll guide you through the best strategies for investing in 2024 and 2025, from understanding the basics to spotting the trends that could shape the future. So let's dive in and set you up for success. So, why is 2024 such a crucial year for investing? First, let's take a quick look at the economic landscape. We're seeing a mix of post-pandemic recovery, ongoing inflation, and fluctuating interest rates. While these factors can seem daunting, they also create unique opportunities for growth. Additionally, technological advancements are accelerating at an unprecedented rate. From artificial intelligence to green energy, entire industries are evolving rapidly, offering investors the chance to get in early on what could be the next big thing. In fact, emerging markets are gaining momentum, and sectors like tech and healthcare are expected to continue their upward trajectory. By investing now, you position yourself to capitalize on these trends as they unfold. But before you jump in, it's important to understand some fundamental concepts that can help you make informed decisions. Let's break down the basics of investing so you can start your journey with confidence. Before you start investing, it's essential to understand the relationship between risk and return. In simple terms, higher potential returns usually come with higher risks. That's why balancing your portfolio with a mix of high and low-risk investments is key to long-term success. This brings us to diversification, one of the most effective strategies for managing risk. By spreading your investments across different asset classes like stocks, bonds, and real estate, you can reduce the impact of any single investment's poor performance on your overall portfolio. Next, think about your investment time horizon. Are you investing for the short term or long term? Generally, longer time horizons allow you to take on more risk because you have time to recover from potential downturns, while short-term investing might require a more conservative approach. Now, let's briefly look at the different types of investments available to you. Stocks represent ownership in a company and can offer high returns but with more volatility. Bonds are loans you give to companies or governments, providing lower returns but with less risk. Then there are mutual funds and ETFs, which pool money from many investors to buy a diversified portfolio of assets. Finally, there's cryptocurrency, a new, highly volatile option that's been gaining popularity. The key is to choose the right mix of these investments based on your risk tolerance, time horizon, and financial goals. Whether you're more conservative or aggressive, there's a strategy that can work for you. Now that we've covered the basics, let's talk about the practical steps you can take to start investing today. From setting your goals to choosing the right platform, I'll guide you through the process step by step. The first step in your investment journey is to define your financial goals. Are you saving for retirement, buying a home, or just looking to grow your wealth? Knowing what you're working towards will help you choose the right investment strategy and timeline. Next, take some time to educate yourself. Investing can seem overwhelming at first, but there are countless resources available, from books and online courses to podcasts and YouTube channels like this one. The more you learn, the more confident you'll feel in making informed decisions. Determine a budget for your investments. Even small, consistent contributions can grow significantly over time. Pick an investment platform that suits your needs like Robinhood, E-Trade, or Vanguard. Look for low fees and user-friendly tools. Now you have a clear roadmap to start investing in 2024. Remember, setting clear goals, staying informed, and being consistent are key to success. Thanks for watching. If you enjoyed this video, please like and subscribe to our channel for more content on investing and financial tips. See you in the next one.